Haven't caught one there, but I've seen them there. Jeez. Yeah, that's the new sickness. That's a challenging fish.
So, first off, thank you very much for hosting us the last couple of days in central Newfoundland and now in St. John's. It's much appreciated.
Our pleasure.
The market seems to have sparked in just after Q1, just after PDAC. Usually it's the opposite, but we're standing on what looks like a pretty interesting market. The precious metals are running, and more importantly to Altius, the copper price is super strong. What's driving copper?
I would have said this time last year, I had this sort of feeling, maybe a little earlier than this time last year, that it could be game on.
Yeah.
But what happened soon after that, the narrative around China property and all that kind of kicked in, and the bears took the day, and we know what the rest of the year was like. But this has been building for several years, right? So it's really only ever been a question of when, and maybe this is another false start, but the difference this time, I think, is it's got that M&A kick going now as well amongst the big guys, which just feels like probably has more legs to it. But what's driving it is that we haven't invested in rebuilding supply in this industry since about 11, 12 years now.
Right.
So again, it's an inevitability. That's the commodity cycle, right? You don't invest in supply, eventually it catches up with you, and you got a problem on your hands, and that's going to be price. So
yeah.
Yep.
And so the M&A that you're talking about, I guess the proposed merger acquisition, BHP and Anglo, it's a big deal. It's a big deal in itself. It was $38 billion, I think they offered, and it was declined. So do you think that's just a sign of things to come? Is that
every single M&A focused lawyer, banker, everyone I know right now is just buried.
Okay.
Like it's mating season.
Okay.
There's no doubt. The rut is on.
Okay.
Yeah.
So it starts at the top and then finds a way to trickle down.
Yeah. Again, I don't know how many actually find each other in the end, but there's an awful lot of talking happening right now.
Okay.
And again, I think when you look back to last year, some of the data points that came out around what it costs to build a brand new mine, $20,000, $25,000, $30,000 a ton in capital intensity, right? You need a big price to support that.
Right.
And you can just look across the street and say, well, there's a mine that's operating and I can buy it for less than I can build that one. The other one that we've got, with whatever uncertainties remain as well in that capital estimate that they've got today. So yeah, it's not really surprising.
Right. So what do you think? Is it just a matter of getting bigger? Like we see Cobre Panama, which is a big story from the last few months. Major impact to the copper market, but I think it shows the jurisdictional risk that's out there, and sort of where these elephants are for the copper market, or what I would say are in the riskier jurisdictions. All jurisdictions have risk, but in terms of
ask me about Alberta someday.
Yeah, exactly. Yeah, 100%. You're exactly right. So what do you think is driving? Is it just a matter of getting big? Is it spreading out that geopolitical risk? What drives the M&A right now?
I think just strategically within these companies, there's a strong desire to get greater exposure to copper for sure. I mean, and it's not just the traditional players, it's the gold companies as well, right? So you've got that extra push. So you've got a couple of choices, right? What's in the pipeline that we can build, whether it's projects they already hold or earlier stage developers that you could acquire, or you buy existing production, and it'll start with the existing production. That's going to be the first big moves, and it will work its way to those that hold the more promising development stage stories, and it'll eventually work its way to brand new greenfields opportunities that are within a pipeline. But I mean, it takes more price than this. I mean, This might feel like a big move. We've got copper touching $5 last week. And if you asked me 2 years ago if that would have been enough, or maybe 3 years, if that would have been enough to really get things going and get people pumped up about their projects and building them, I would have said yes. But the problem is that over that 3 year period, the cost side of the equation has gone up even more than the recent run in price. So I would say we're actually further back from that point of where price incentivizes people to go and start spending money. It's actually moved further out of reach than it would have been $1.50 ago in copper price, if that makes any sense to you.
Okay.
Yeah, the hurdle for what price you need for these projects that people have on their books to make sense is it's been running. Right. That's the hottest, the hottest running part of the market right now, not the price. It's the cost side. That's running even hotter.
Do you think recession fear or a recession occur? I guess it depends on how you define it, but could a recession quell that momentum?
On the cost side of the equation?
Well, the cost side is going to be there, but what I mean is, the incentivized price for copper, obviously, like you talked about, it needs to be higher for companies to pour more money in. The copper price as it is in terms of supply and demand, I could see the demand side of the equation possibly taking a hit if recession. So I guess the overarching question is, does a recession play into impacting that, or is it something else that can make this a false start?
Only in a really myopic sense. You can go back over time and look at long-term demand for copper. And I'm talking like over decades, or a century if you want to. And you can superimpose recessions that happened over that period of time. You need to really zoom in to see any meaningful impact on demand. So to think that like a recession is going to be the cure for this woeful supply situation you've got, I don't think so. Okay. Because what you're talking about is demand destruction of a scale that's never been seen is what will be required to offset the supply problem right now. Like a bigger challenge to like where this all sort of has to balance, I fear actually, is that the limiter or what will drive down demand is not a recession, it'll be price.
Price, okay.
It'll be price-based demand destruction, substitution, and there'll be positives, like it'll probably drive greater recycling adoption and those kinds of things. But everyone loves to see that great price, but if you're really long-term, deep invested in the copper business, what's coming is a big problem.
Right.
Right. This is not good. It's not good for your customers. It's not good for your business. There's going to be a mess here for a bit.
Yeah.
But you know what? We'll get the price. We'll build the mines. We'll build too many, and then it'll all happen over again. So who worries too much?
The cycle
about it,
repeats.
Right? Yeah. I'm not going to get too. I'll take the price side for now.
Right.
Yeah. The other point to that is the copper price that a customer's been paying for the last 4 or 5 years. It's almost been subsidized. It's been anyone who got copper at the prices they got it at over the last several years to build infrastructure and everything else. They should see it as a gift. Like that was a gift. You got it at way below the cost of replacing, that production.
Right.
So now there's another side to the equation.
Yeah, certainly is.
Every dog has his day,
Yeah. Going back, I guess almost 30 years now when you started Altius, did you always see Altius as a project generation, organic royalty company? Was that the idea that was incubating in your head?
Well, even before Altius, I was involved with mineral exploration as a prospector, and effectively that made me a prospect generator. I don't even know if the term was coined at that point. I don't think it was.
No, I don't think so.
But what would I do? I'd go out and break rocks and hope for something that looked interesting enough that I could run off to the Cordilleran Roundup or PDAC and find some junior to option it from me and get some option payments and hold on to a royalty and hopefully pay my tuition and rent that year. Right? So while still in school was when the Voisey's Bay discovery was made. All of the juniors that I had, contacts to already through trying to sell, prospects to, all wanted to come into Labrador to get near the Voisey's Bay discovery, classic area play stuff. And so I had those connections and contacts, and that was really the real game changer, I suppose, the real shocker kind of event. So we, myself and others, Lawrence, Chad included, would have been heavily involved with staking claims in Labrador around the Voisey's Bay discovery and optioning them on. And I guess from that it was this, a lot more dealings with junior mining companies, and there was a lot of stock activity, and it was a pretty crash course.
I bet.
And came across a lot of junior mining characters and players, and especially back in those days and in the midst of a gigantic area play, even as someone in your early 20s, it was obvious that some of these were not the most impressive characters in the world, and it made the whole idea of running a junior exploration company a little less intimidating, put it that way.
Right.
But no, I mean, the initial idea, once the decision was made, let's give it a shot, let's start our own junior mining company. If those guys can do it, we can do it. Yeah. It was probably a little more of a traditional story, was what we were kind of running with, which would have been, we had a base of projects because we'd been generating them as prospectors. And, we'd go and raise capital, and we'd do the exploration, and hopefully we'd make a big discovery, and, kind of the story, right?
Yeah, the dream.
The thing that kind of tripped that up was literally as we were finishing up the IPO process was when Bre-X imploded, and the market just went no bid, right? So this whole idea of just being able to go and raise capital in the markets, carry your exploration programs, and suddenly look really bad, really shaky. It was like the capital part is missing in the equation right now, and like, what the hell are we going to do to survive? Yeah, because we didn't know when the next ability to raise money was going to come up. Yeah. And we'd only raised $300,000 in the IPO, right? Yeah. So that had to keep us going. And then it was, I remember it was actually a big sort of strategic type board meeting, panic backdrop when it was, it was Roland Butler and I at the time, when it was just, we've got to do what we've always done here. We've got to, at the lowest possible cost, bootstrap, find more prospects, and start farming them out. There are groups out there that raise money in the cycle before it went bad like this. They've got capital. We are good at generating projects. We're going to move them in. And so, that kind of shift to the project generator model, which is really what we were saying, was driven by that or die, right?
Right.
It was, so I'm not saying we wouldn't have found our way there or wouldn't have had that as part of our overall strategy going forward. But that was what really kind of enshrined it. And, those next few years, from Bre-X, I'm going to say up to 2000, whenever the dot-com bubble crashed, right? Because in that same period of time, you had, we were now focused on this prospect generator model, was when all of the competition, all of the other junior explorers that were out there that we might have had to compete with for projects, were all, becoming something.com. They were just completely, they became shells overnight, and then they became .com. So everyone was gone. Like, it was empty. The room was empty. Yeah. And we were able to pick up projects. And at that time, because there was just so little appetite to buy the projects from us, from the juniors, we were left with a pretty tough customer audience. It was only the producers, really.
Big guys.
So we were able to do deals with, Billotons and Barracks and Inmets of the day. And, there's a good list in that window of time when everyone was out trying to become a .com. But it was good, because I think when you're selling to that kind of a market, because what are you doing there? If you're going into a BHP Billiton or a Barrick, you're essentially competing with their own in-house exploration groups. Yeah. And trying to show a project that has more merit than whatever they've generated themselves. So it's it's like fresh out of school groups. You're setting a fairly high bar. But again, the other side was there was so little competition on the ground, and there was also low background noise for anyone who was still following junior mining, and there weren't that many. There was an announcement after announcement, right? It was, oh, geez, those kids got Barrick signed up on a project. They're talking about Carlin Gold in Newfoundland. Like, what the hell, and then a few, pretty good results and nice drill holes here and there. And I guess what I'm trying to say is it started to feel pretty good about what our role in this might be. It was also around this time that the term started to pop up a little bit. So there would have been us and the Virginias. It was a company called Southwestern Gold. For most people probably won't remember it at the time. Rick Rule would have been talking about prospect generators. It became a bit self-reinforcing, and so by the time the market did turn and .com imploded, now all these new .coms were scrambling to try to, reconstitute themselves now as junior miners again.
Yeah.
So they're all flooding back in all of a sudden. There's a bid in the market. Gold prices started to move, and what do they need? Projects.
Yeah.
Guess who's got them? Right? So it was, I'm kind of going into that early 2000s period now, and kind of early in that, it was obviously customers. There was just a lot more of the junior customers coming back, and that was, I think, one of the most important shifts we made. Is we took our focus and emphasis a little bit off of just trying to sell to the majors. And under that deal structure, it's going to be they're going to come in, give you an option payment, agree to so much expenditure on the project. In the end, you're going to own 30 or 40% of a project if it works out, plus, if it's diluted down to a royalty. But, it's almost ludicrous to think that as a junior mining company that you're even going to be able to keep up with that 40. So you're already diluting to the, almost accepting it with very rare exceptions. So we started to do more straight outright sales of the projects for the royalty, kind of bypassing the dilution stage. But the shift was we would take big chunks of equity in the junior company that was buying the project right out of the gate. And so obviously the royalty was there to protect us or reward us in the event of a big discovery. But as we all know, there can be an awful lot of projects that show promise at varying stages and get to various points, get caught up in just broader rising tide things. There's a lot of ways for a junior mining stock to go up without the project in the end making it to becoming a mine, because we all know how many hurdles are there. So, that became interesting to us, and we actually started to find ourselves with a few of the holdings, junior mining holdings that we had as part of project vend-ins, catching a real bid and being in the right stories and having good exploration results. And we were able to, monetize pretty meaningfully around some of the equity positions that we'd assembled, while always holding on to the royalty, right? So it just makes it a bit of an easier, when you're covered for the ultimate upside, it lets you think a little bit differently about the other parts. So we could take back capital, sell the equities, recycle it back into projects and other ideas. And so that whole period into the, sort of the mid to late 2000s, that was, it might be the biggest modification that we put to the prospect generator model.
Right.
I think it was the most important one. It was most important in terms of making the model more than just something that protected your downside and was good for, managing your capital structure and all that sort of thing, spreading the risk, all those things that are talked about in terms of why the prospect generator model is so rational and good for protecting risk. But that was a twist we felt that also showed that it could be lucrative on an ongoing basis, that it could actually be more than a way to increase your odds of being a participant in a discovery, but created a means to make a meaningful, ongoing flow of cash flow, even before the takeout stage that everyone is shooting for. Right. I guess what I'm trying to say is the prospect generator model might have at that point been, creating more shots on goal, more opportunities to be part of a discovery and get taken out for the discovery. That was just an odds altering game. But for us, it was, what? Even if we don't have that, if that doesn't happen here, we'll still have all those shots on goal, and it could happen. We're going to make money anyway. Right. And we're going to have a viable business. And it was kind of a thinking around, this is something, it's almost supply chain to the mining industry, right? It needs a fresh flow of projects. It just needs that. The industry it's the absolute core building block. Yep. And it's a service that you're providing, and you should get paid for it. And that was kind of the mindset we took to it, and the discipline, I guess, we brought to it, that we were going to be a profitable prospect generator because of the service we were providing, irrespective of whether or not we ended up with the home runs or not. Yep. Right? It wasn't all or none anymore.
I think this is a good opportunity to get you to define what a royalty is. I think there's part of the audience that, especially right now, they're getting attracted. The gold price and the metal prices are going up, and they're listening to us talk, and we're talking about royalties. So what is a royalty?
I guess at its most simple, it's a typically small, off-the-top interest in the future production from a mine. Compared to the two types of interest that you would see in a typical mine, there'd be the mining company's interest. So they're responsible for putting up all the money to build a mine. Then they've got ongoing costs every day to mine and process the rock. And the difference between all of those costs and the price they receive is their operating income. Mm-hmm. The difference for the royalty holder, and where it originates, is royalties were typically retained by small prospectors selling projects to mining companies. So groups that wouldn't have the financial wherewithal or the technical wherewithal in many cases to even be part of the mine building and development. So it was just it was a form of payment in the form of, a future share of the production from the mine. So for the royalty, on the royalty side, it's there's no, or shouldn't be, any exposure to the upfront capital to build a mine. None of the ongoing operating costs. So for the operator, their interest is the margin between the cost to produce the metal and the price that they get it. For the royalty holder, the price is the margin.
Right.
Right. That's the difference. There's no offsetting piece there. I mean, we could get into it a lot further than that, because over time, what was always, the royalty has now evolved, and it's become not just something that a prospector retains for breaking rocks. It's now evolved. The concept largely has evolved. It's become streams, which, quite frankly, are more financing products than they are the product of the fruits of one's prospecting efforts.
Yeah.
It's a financing tool. It's much more of it's just a different kind of construct. But you had to be careful, I guess, to not assume that a stream is a royalty. There are notable differences. For one, typically a good royalty, in our opinion anyway, the legal ownership of the asset of the royalty should be at the level of the title of the overall property. So it should stand with it should have the same kind of standing legally as the interest that the mine operator holds.
Okay.
Right. So your boat registered on title. When you go to the lands office and say who owns that property, the person should say two groups own that property. One group here owns their piece, and completely separately, and a separate registration, this group owns their piece. And that would differ from, say, a stream, where more typically the owner of the mine is the owner of the title, and there's a contract between it and whomever has the stream agreement. So it's a contractual obligation of the mine operator to pay, but it could be dicey in the event of a bankruptcy of that operator, because it's a contractual obligation. It could be dicey in the event of an expropriation. Right? Does a contract holder, someone whose asset's been expropriated, have the right to seek arbitration? And a lot of these things are being tested as we speak. But probably most simply, the difference should be, when they're done right, is that a royalty, if the operator goes bankrupt, the royalty holder shouldn't be in the list of creditors. Right? So when people are fighting over what's left, one of the things that you're not going to see is the royalty holder they're fighting for, because there's no obligation, there's no contract, there's nothing that's been lost from the operator losing their piece. They've lost their piece.
Yeah.
And now people are fighting over it. My piece is entirely separate.
Yeah.
And to the extent that the project changes hands and the royalty obligation becomes a new owner's, that should flow naturally to the new owner. So we've seen that situation. In fact, our Caminho royalty has been tested like that. The original operator who brought that project along did get brought into bankruptcy. The project was acquired out of bankruptcy, and our royalty survived the whole process completely intact. The new owner had to acquire it with the royalty attached, and that was never in question.
That's a good segue to talking about Caminho.
There you go.
This is a big deal that's on the horizon after, probably 20 years almost?
20 years since we first.
Yeah. So what's the story on Caminho right now?
Pretty optimistic on where that sits right now, but it's kind of like wine that's come into its own, from a market's perspective. I mean, it was always an exciting project in that it was in the midst of all the infrastructure around the producing iron ore mines in the Labrador Trough. What shifted in the last little bit is that there's bifurcation in the iron ore and steel market that's happening as we speak, and the traditional core means of producing steel through the blast furnace is sort of waning a little bit in terms of its market share, and at the same time you've got the electric arc furnace really starting to come on. And the difference is that a blast furnace can take pretty much any quality of iron ore if you whack enough coal in on top of it,
Right.
and out comes steel. An electric arc furnace is a lot more finicky than that. It can basically take scrap, like so pure steel with whatever's been added, or the very few ultra pure forms of raw iron ore that are out there in the world. So that's why I'm saying Caminho, I think, is kind of finally coming into its own, because it is actually one of those. That was not that much of a benefit 10, 15 years ago.
Right.
Like, there wasn't a big differentiator because it was all going to a blast furnace anyway.
Right.
You might get a little premium for the higher purity,
Yeah.
but it's not the same, like this gulf that, there's almost a Rubicon between a Caminho iron ore and all of the iron ore that comes out of Australia. 90%, 95% of what comes out of Brazil. Like, there's two different, there's bifurcation.
Yep.
It's not a continuum from low quality to the ultra high quality anymore. There's that stuff, and then there's this stuff.
Okay.
So that's pretty cool. And the other thing that's shifted, of course, is I mentioned that previous bankruptcy process.
Right.
Is just the home that it's found. So it's landed with Champion Iron Ore, who is obviously been on this whole electric arc furnace shift for some time, and is, very obviously trying to stake out the turf as one of the true leaders in providing that new type of iron ore.
Right.
Great track record for execution, an operator, proven player, somehow manages to do things at the price that they say they're going to do them, and on the schedule they're going to say they do them. It shouldn't be all that remarkable, but it is these days.
Yeah.
And they do it consistently.
Yeah.
So I mean, I couldn't be happier with the champions for the project right now. Like,
Right.
it's in the right home.
And would it be, how meaningful would it be? Like, where does it rank, if it were to go into production, where would it rank in your royalty in terms of revenue?
Pretty easily, as like, on an annual basis, because the fees or the whatever project study they just published, they're running it at about 9 million tons a year is kind of where I think the first stage optimized. So at that kind of production rate, it would be easily the biggest mine contributor to our portfolio. Now there's some things with the Silicon project. There's years in that production profile that we just saw that might actually trump.
Yeah.
But on an average life of mine basis, of all of the assets in our portfolio, go out a few years into the future and dream about what might be. The Caminho project would
Be right up there.
Yeah. Oh yeah. No.
So-
Up there and beyond.
Why don't we move to your favorite metal, gold?
It is now.
And,
I've never not liked gold, first and foremost. I never felt we could compete in gold.
Right.
So I get knocked as well. People think I'm a uranium bear. I don't know where the hell that came from. It's like probably been one of the most successful investments we've ever had.
Yeah.
I made a comment at one point that we're not really exploring for uranium because so many great discoveries got made in the last cycle. I didn't think we could compete with them. So why would we bother? And suddenly now I'm a uranium bear. But anyway, and so similarly, just because we've been the non-precious metals focused royalty company, by no means, suggests that there's any aversion to gold. I own gold personally, and in fact, if you go and take a 20, 25-year view on gold, it's probably got the best compound price growth rate of all of the major commodities. It's probably like where copper will be in the sixes compounding for 20, 25 years. Gold would probably be somewhere in the sevens or eights. So I got no issue with gold. But would we, when we were starting, when we had made that big first chunk of money selling those early equity positions in uranium, some of it, and had to figure out what we would do with that much cash, and made the decision that we were going to try to buy some later stage in producing royalties, sort of to fill out all of the exploration royalties that we created. We just consciously said, are we going to do that and successfully compete in the gold market against Franco and Royal and now Wheaton coming on. It was moronic. When you could just look and see, well, who does this in, copper and base metals generally? And it was, whoa, it's a pretty limited field. So that's where that came from.
Yeah.
Not an aversion to gold, an aversion to competing with really formidable competitors in gold.
Right.
Yeah.
And that makes sense. That makes a lot of sense, especially given the landscape, the cost of capital, competing against a company like Franco, who's on a different plane in terms of that cost of capital. It's a big deal. Why don't you tell us a little bit about silicon, though, and it's not necessarily its potential impact, but what's the exposure that you have?
So while we weren't out actively buying, or competing for M&A to buy royalties on gold projects, gold has always been fair game within our project generation business. There we're out breaking rocks, and in fact, there's probably been one of our focus areas in project generation because there are more customers available for gold projects than there are in the other commodities. So it's it's been fair game. And hopefully, proving my point that it's not an aversion to gold; it's an aversion to losing fights that we can't win.
That's right.
Right? But on project generation, we could, and we have been there. So that's the roots of royalties like Caminho and even silicon. Now with silicon, it's a little different because it came in through an acquisition that we made of Caminho, who had the 777 royalty, but it also had a big portfolio of earlier stage royalties, and maybe not coincidentally, but the original founding partner, Roland Butler, who I mentioned earlier, was the guy who was the architect of that at the time, right?
Yeah.
So it was certainly a feature of the acquisition for us. We knew that we were also getting a bonus pool of, a lot of earlier stage exploration royalties, and knowing that Roland would have been the architect of putting them together, they were going to be, good shots on goal.
Yeah.
So there's just an example there of a royalty that came from an original $300,000 grub stake exploration agreement. Eventually found its way to Anglo Gold, raw early stage stuff. I don't know if there was but when they first drilled it, I don't think there had been a rock sample collected at surface that had broken detection limits for gold. It was scientific. And second hole whammo. And since then, it's not that long ago, it's emerged in the hands of Anglo Gold as one of the most significant gold discoveries the world has seen in a great many years.
Right.
Anglo Gold is one of the biggest gold mining companies in the world. Anytime they get a chance to stand in front of a microphone, they're talking about silicon as a game changer for Anglo Gold.
Yeah.
Right. I'm not convinced it doesn't put Anglo Gold in play, quite frankly. That's the kind of scale and impact you're talking about here. So they've identified within that district now more than 17 million ounces, but every bit of material that you pick up from them or listening to them, this is open that way. We're drilling a condemnation hole a kilometer north of that deposit. Oh God, we hit another big one. And, it's pretty early days. It's really starting to look like it might have almost, maybe even the scale characteristics of the Cortez district or the Gold Strike district. It's just apparent that this is a really big mineralizing system, not an isolated, kind of deposit. This is looking like a bit of a beast, and it hid in plain sight for quite a long time.
Yeah, it certainly did.
Yep.
Shifting to Newfoundland, you guys have been generating prospects or generating projects here for now close to 30 years.
More than 30. It goes back to way before Altius, and in fact, some of the projects that are still within Altius were founded before.
Wow.
I saw the word Altius on a McDonald's wristband at a drive-through window.
Really?
Yeah.
So, how has Newfoundland as a jurisdiction for mining changed over that time, and where do you see it going in the future?
How's it changed? I guess everywhere has changed. Maybe Newfoundland less than most, might be one way I'd put it. This is a pretty natural resource-based economy. If it's forestry, it's fishing, and largely the bulk of the population is here. In most, it's a rural economy, natural resource focused, and I would say that there's a pretty high appreciation for the mining industry. Right? I mean, the big mines in Voisey's Bay and IOC, and the base metal mines around Newfoundland. Who doesn't have someone in their family that's involved with it like that? So, I guess the point I'm making is that socially, I think it has a relatively high level of acceptance here. Geologically, it was a great place, I think, for us to cut our teeth because it's so geologically diverse. I mean, there's practically every known deposit type known to man can be represented in some part or another of the geology here. There's, it records the whole tectonic cycle, full ocean opening. So, you've got compressive regimes, extensional regimes, and you go to Labrador. I mean, to be a well-rounded prospector or geologist in Newfoundland, you're going to see, with coastal level exposures, you're going to see pretty much all of the key mineral terrains of the world that you can then take everywhere else. So really cool spot to cut your teeth.
One of the favorite segments we've obviously talked before is it's sort of a binary question period where we go over each individual metal and then you say,
oh God, I remember
bullish
that
or
now.
bearish.
Yep.
And if you want to add any comments, it doesn't have to be binary.
I should have got you to, or if you were going to do this to me, I should have made me review what my past, but then I could probably.
Your record's good.
Is it good?
Oh, it's good. It's definitely good.
Okay, good.
Yeah.
Oh boy, so I should just leave it there.
Yeah.
Same answers to everything.
Well, we'll start off with what we've already talked about. We'll start off with copper.
Okay.
Bearish.
Extremely bullish. I do feel the last couple of months have a bit of maybe a little too far, too fast feeling to them, but this is not the price that gets the supply into the market.
Okay.
And I know there's an argument that is going to be made, because you can look at today's copper price and say, oh, this is higher than the peak copper price in the last cycle. Right? And from the bottom, say in 2016, it's been a similar duration from bottom to top then is from bottom to now. So, you can make the argument that, this could be kind of getting up there in the cycle, but that just misses the key fact here is that the peak of the last cycle came long after incentivization had been reached. Money started to pour in, mines started to get built, supply got created. That hasn't even started. Like, that's what makes me bullish. Right. Like, we have to get to a price that gets the party started, that gets money flowing into the ground. And then that money has to translate into, through a protracted process into a point where you can start to see and visualize, what periods that supply will come into the market. And, that's where I stop being bullish, right? Is when you can see that.
Right.
But I don't even have a clue right now who's even got a project that they can pull off.
Right.
Like, versus, wow, if all these projects that are being talked about come, actually get built, we got a problem on our hands. Well, right now that list is zero, right, of who's competing with each other. So it's pretty hard not to be bullish. And like I said earlier, it's too good in that it's the only real answer here has got to be price-based supply or demand destruction. We all know the cycles and how they operate, but this one has gotten out of hand. This is cutting it too fine.
Right.
You can't starve the industry for that long and starve investment in replenishment for that long and then just think you're going to get a price and snap your fingers and there's your supply. It don't work like that anymore.
Right.
It also makes me think that this cycle, the last cycle, say from 2000 to 16, so 15, 16-year cycle, the duration of that is always going to be a function of from the point you get supply incentivized to when it can come to market, right? So that there's like actual practical backdrop to this. Like, there's a time from when the price is right and people want to invest to when they wreck the market. Well, that in that period of time since mid 2000s, that from the point where you've got incentive to when it comes to market, that's really stretched. That time. So, like, I think that's the other feature I'd say about the cycle that we're in right now, and it's kind of a counterpoint to that. We're a similar point now from bottom of market to today. Is the whole upswing of the last cycle goes, is the wavelength is just getting longer and longer, but it's normal. It's what you would expect because the time frame from incentivizing to getting the supply, and wrecking the market is just long.
Right.
Yeah. It's a very long answer to that question.
That's okay. How about zinc?
Zinc I'm not as up on anymore, to be honest with you. I just don't have that, because again, we don't have that much exposure at the moment, right? It's a little bit through Currypampa, but when 777 went down, I was just,
Nickel?
But I'll say this, like it's got the same overall, there's a rhythm. Some of these things can be a little out of sync, but the broader waves, like they carry each other along, right? It's some can run and start a little earlier and end a little earlier, you'll see that. But there's a broader overlapping pattern, there's always going to be. And what'll happen is that gold will run, people will make a bunch of money there, they will want to find the next thing, and then the narrative builds, and the sentiment, even though the supply-demand fundamentals might have little different characteristics or different timing, the overarching sentiment factor will start to sweep across the complex. This like the first of this cycle, if let's say the starting gun did go off in early 2024, which may well be the case, this might be that 03, 04 kind of, there we go. Back then it was gold that let it out and dragged copper into it, but then obviously copper's fundamentals followed it. So again, there's you do this long enough, you start to feel a rhythm to things, right? Yeah. I might eat my words in all of this and say be back here next year and say that was another false alarm last year. But if it is, we're really screwed. Yeah. As far as if you're a buyer of copper and you need copper to build an electrical grid in the next 5 years, we all got problems.
Right.
Yeah.
What about nickel?
Nickel I like. It's obviously been a rough little haul the last little while, and there's a reason for that. There was, a flood of new production that came in through, actually a lot of Chinese investment into Indonesia.
Yeah.
So it came in, it took advantage of some pretty good grade lateritic deposits, near coasts, and you could build a plant and go grab the high grade and all that sort of stuff right there. And it's changed the nickel market a fair bit. Like it's knocked a number of traditional nickel sulfide players out of the market. There's a price on the cost curve where they can operate well, and if you were a nickel sulfide deposit that was higher than that, the market's doing its thing.
Yeah.
It's knocking you out. I feel largely like the limit has been reached as to what Indonesia can bring on to further drive down the cost curve. Right. So basically, if you've survived here, I don't think you're just going to see that continuous pressure on the cost structure anymore, or much more from here. That's going to knock you out of the game. It's probably not great news if you've got a nickel sulfide deposit that needs $11 a pound. Might be a while, but that said, I think the high grading element of the laterites has passed it. Maybe the free ride on the environmental stuff seems to be coming under enough pressure. That there's cost pressures. I would say a lot of that Indonesian production was artificially subsidized in that it wasn't forced to pay normal environmental, social costs that are associated with competing projects elsewhere. Right. That there's a lot of international pressure there that seems to be making that shift, but mainly it's just the easy high grade stuff that's right next to the plant you built is now 3 miles over that way, and it's not as good grade anymore, right? So I think so I'm bullish in the sense that I think the onslaught might have run its course here.
Right.
And it's always a great time when you get to that point when you can, what is that saying, when the tide goes out, you see, who's got so this is one of those times. If you're still there and your shorts are on, that's probably an okay bet.
Yeah. Yeah. What about silver?
Silver, I wouldn't have super strong opinions, into that discussion around whether it just gets carried along as a financial asset like gold and gets dragged there versus the more industrial side. Yeah, I just haven't had the impetus to really dig deep and to see where we're to on that. It's definitely got that same that financial side I can get my head around, and just how, like, I have a good handle on why gold is been compounding at the rates it's compounding on, because it's really just the function of the currency you're expressing it in, and that's
Right.
pretty plain to see.
Yep.
Right? Silver had, so to the extent that that coupling is there and is a key driver, I guess I'm fairly bullish on it as well.
Why don't we leave it there? It's been an absolute pleasure talking to you, and then visiting, some of Altius projects this week. And until we talk again.
Awesome. Well, thanks for coming out and joining us. And no, thanks
forward to
for coming out and visiting us. Real pleasure.
Excellent.